Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
Welcome to Master of the Markets. I'm Barry Habib at MBS Highway. It's created exclusively for NMP TV, and it's brought to you by our good friends at PRMG. They're working for your best interest. You know, last week there was a very important Treasury auction. We'd started to see interest rates move up, mortgage-backed security pricing getting worse. The 10-year Treasury is an important barometer for the direction of interest rates. And when we looked at the 10-year Treasury, there was an auction coming up, and there was a very important level of 1.6 that we told you to watch out for. Well, this would have been the highest yield since June that people would be able to purchase. And the purchases of 10-year Treasuries were met with very robust demand, both by domestic buyers and international buyers. That's a good sign. It tells us that 1.6 on the 10-year Treasury is going to be and remain a critical ceiling. So long as we see that demand at around 1.6, we should see interest rates stay pretty good. However, we're getting reports that inflation is on the rise and it's sticky. Even the Fed, who had been kind of lying to us and saying about this transitory stuff, they are now coming around and saying, well, maybe it's not so transitory, and maybe we will see some persistent inflation over the next couple of years. So because of this, we have to be very on guard. Interest rates right now, pretty decent shape, a little higher than they were, but still pretty good. But that 1.6 level on the 10-year Treasury is something you need to watch very carefully, because a break above that would indicate we're off to the races to somewhere around 1.75 on the 10-year. That would cause mortgage rates to start to get into the mid-threes, which still, relatively speaking, not too bad, but that could put some heartburn in your daily activities when you've talked to customers with lower rates. And then, of course, customers are behind the curve and you tell them a rate of, even in the mid-threes, they're going to be like, oh my God, that's so high. And we know what that's like. So let's watch that together. Now, we did get inflation news last week on both wholesale and retail, but the retail one, the consumer price index, that was the important one. And it did show inflation. It did remain steady, 4% on the core rate of inflation. It's still very elevated from where we were, about double where we were. But here's the thing. When we look at this number, what happens is it takes the last 12 months. So it gets the most recent month and it kicks out the month that was 13 months ago right now. So the comparisons to get the year-over-year numbers, you kick out an old number and replace it with a new number. The old numbers were pretty high. So when you replace with a new number, even if it's high, the overall year-over-year stays the same. Here's what's about to happen over the next 3 months. The comparisons from a year ago are going to start to show some numbers that were extremely low. That tells us that we're going to start to see that core rate of inflation start to bump up above 4%, maybe 4.2, 4.4. By the end of the year, around 4.5%. This could be concerning to interest rates. So it's an important point to talk to your customers about so they're not so cavalier. Hey, refinancing right now with debt consolidation, that's a no-brainer. People should be doing that. And purchases, might as well get a rate that's lower. And even if they start to piss and moan about a rate that is not as good as it was, well, you can't go back. Boy, we wish we could have bought Bitcoin when it was $1, right? You can't go backwards. What you have to think about is this rate that you're going to get today better than what you can get in the near future? And I think that while we're not going to move in a straight line, overall, because we see inflation moving higher, probably at a level right now where these rates seem to be in the short term pretty attractive. And if inflation starts to bump up, they'll start to look like really good rates. Hey, if you're not on MBS Highway following this every day, you should be. Get a free trial. Just sign up. Well, all your teammates that do have done very, very well, and your competitors that do have done very, very well. And that's not a good thing for you if you're losing out to them. Talk to you soon.
Be sure to click on the link below for your free 30-day MBS Highway trial.